Morning, guys. So the stock market is quite often a lot of tomfoolery and quite often wrong. Um, with last night, there was three separate individual Fed members came out and spoke. All of them were extremely hawkish, meaning interest rates are going to remain high. One said that we're not even at neutral rate yet, meaning more upside. And she also said that the Fed won't be bringing rates down in just a few months. And another one confirmed that rate cuts in 2023 seems a very unlikely scenario. So rates soared, but so did stocks. This here is the Nasdaq, and it just took off. So if interest rates are continuing to rise and interest rates are not looking to come down anytime soon, that's bad for stocks. So why did the stock market rally? It's tomfoolery, completely beyond me. I don't understand the stock market sometimes. But what I do understand and I do know is that the bond market is the most intelligent and often always correct. And as we can see, the bond market also rallied on the comments, but that didn't last. As we can see, the bonds fell. And if we go and have a look at some of the commodity markets, that is also indicative of inflation coming off and a recession coming on. We can see that copper is coming back off again, oil is coming back off, gasoline off, and we go into the softs, and it's an even more darker scenario where we're seeing, yes, or orange juice is up, but lumber down, which would suggest the housing market is really struggling. And as we can see, that's been on the go for some time. So, yeah, I think the bond market is correct, and that's the currency markets follows what's happening with interest rates, because currencies are an interest rate bearing instrument, and it's highly sensitive to where the interest rates are of that country. And so US dollar took off, but sort of weakened somewhat as the bond market turned around. However, if you're looking at it on a technical basis, you've got a higher high, the market closed in the middle of the day, so it's kind of mixed messages with closing in the middle of the day. Doesn't really give you a strong indication as to what direction it's going to move next, but you do have a higher high and a higher low, so the probabilities are towards the upside. That's the way the market's leaning. And that brings us back to the euro, which is still stuck in this range that it's been in for the last couple of days. So it's back in that and could track back across. But with the US dollar in the middle of nowhere, the euro dollar in the middle of nowhere, it's a bit hard to see. Aussie dollar had a bit of a support. Don't see why with commodity markets not the strongest. Iron ore back off. Coke and cola is hanging on to some highs, but another coal market is coming off. So commodities are a little bit weaker, which is that scenario of a recession and reduced inflation. So I'm not sure why the Aussie's getting bid, but maybe because of the US dollar weakness and the fact that we raised interest rates this week, even though that was sort of by the rumour sell the fact scenario. I would be looking to try and fade that Aussie as it's trying to push back through 70 cents, which is up around here. It's not even going to get that high, I don't think. Somewhere around the 69, 66 mark would be somewhere to fade it. As you can see, I shorted the pound yesterday and looking for that to just track a little lower as the US dollar strengthens. And other than that, You know, I did say earlier in the week, you know, selling stocks that should come back in and fill that gap in. Clearly, the algo engines have a different opinion, and I think that raising interest rates is great for the market. So if you guys can figure that one out and let me know, that'd be great. Otherwise, yeah, I'd stay away from stocks right now because it doesn't make sense at all. Follow what's happening in the bond market because that's going to give you a clear indication on what you should be doing in currency markets. Okay guys, all the best. See you next time.